Welcome to Core Finance, where I'm very happy to say that I'm joined by Bill Blain, a strategist at Mint Partners. Hi today, Bill.
Good morning, and how are we today?
We're very well. We're not going to mention any remuneration at any other broadcasters, because obviously
We certainly couldn't be speaking about what the BBC is paying its presenters.
No, we don't even mention those lessons.
That would be wrong for us to comment on.
It's all about core finance here.
It is.
And it's also all about, there's a bit of a, I don't know whether people were genuinely surprised or shocked, but there was a bit of a wobble in the pound before the CPI figures were released yesterday. Was that a surprise to you?
Well, it's not just a wobble in the pound. I think it's a fundamental reassessment of the mood of the last 2 weeks. 2 weeks ago, suddenly everyone went on very much a global tightening track, that it would be the end of QE. You'd see central banks resolve their balance sheets by working them down. We were talking about imminent, massive rate cuts. I mean, a whole quarter of a point in the US and possibly even in the UK, where the Bank of England suddenly looks split. And then, of course, this week we've seen a reversal of that whole trend. The ructions that Trump has suffered because of the collapse of the repeal of Obamacare knocked the dollar into a soft footing. We've seen something of a reversal in the UK with inflation coming down, so removing any need to hike rates. And I think tomorrow we're going to see continuation, same as from the Bank of Japan, and Draghi is going to realize that the strength of the euro is going to pull down the Eurozone recovery, so we're going to see a very dovish Draghi. So everyone's been on the bullish uptick, and now we're all being doves. Hawkish uptick, and now we're dovish again. Mustn't mix our animals when we're talking about markets.
No, that would be
wrong.
That would be totally wrong.
So it is a slightly different mood in the markets today.
All right, so a couple of points there. It seems that, I mean, for instance, Donald Trump, these days he can't even successfully tie his shoelaces because he just is a powerless president. And that's hurting the dollar now, isn't it?
Well, I think the dollar's taken a little bit of a knock on US numbers, and also a wonderation where the Trump inflation trade goes. It's just not happening. But I don't think that means it's dead. I think it just needs to be redirected. I think what we really are seeing, and this is why I was so fascinated by something Jamie Dimon, the CEO of JP Morgan, came out with when he was talking at a conference over the weekend, where it was a frank admission that he and others are embarrassed by the state of US politics. And this is the interesting thing. It's not Donald Trump that's the problem. Now, strip aside who Donald Trump is, what he is the US president who has a set of policies designed to get America working and designed to get America to a 3 to 4% growth rate. What is holding that up? Is it the global economy? Is it China? Is it protectionism? No, the thing that's holding up his policies is much more about the internal politics in the US, where it's the Republican Party and its fractured nature that's tripped him up every single time.
Well, obviously he was not the candidate they wanted. The other point is he started...
I'm not sure they had a candidate.
Well, exactly, yes, yes. And the other point is that it's turned into a constitutional monarch, really. I mean, he doesn't have any that power. There is a power issue, isn't there?
Oh, I think he's realised that he's... I think constitutional monarch's an interesting description, because he can suggest, he can cajole, he can Twitter, but he can't actually get anything done. And I don't think that is a positive thing, no matter who the US president is.
Have the markets factored that in? Has that particular penny dropped? Or is it just the dollar dropping?
I think the markets very much understand that there is continued gridlock in terms of moving the US economy in. And I think that factors into its thinking on long-term economic growth. I think it's very likely that we're going to see growth reassessed across the globe for the rest of this year. At the moment, we have some very positive characteristics going on in terms of the uptake in global production, global growth, and the way that stock markets seem to be holding their own in that. But once we see a slide in the estimates of growth caused by the political reality that we're now seeing, I mean, look at it, we've got two of the world's largest economies in absolute political quagmire at the moment. The US, which is very, very important, and the UK, which is arguably marginally less important, both swamped. Well, I'm afraid it's true.
But I mean, the situation here, again, is that something which has been factored in, or people are saying, well, like, you know, the confidence and supply deal is in place. We're fine for 5 years. We can forget about that. Is it going to be as easy as that?
No, I think it's a very difficult and tortuous one to call in the UK, and that's because we've got multiple vectors of uncertainty at the moment. We've got the sheer imbecility, and I'll use that word, imbecility of our government just now, where the only reason we have a government is because everyone's too terrified of what might follow it. We then have the Brexit negotiations, and the thing I'm still smiling about is that photograph earlier this week where the Europeans turn up all deadly serious and prepared looking for the Brexit negotiations, and you've got Dodgy Davis on the table smiling like some manic 60-year-old accountant who's been taken out to the local cricket club for the afternoon. It was just embarrassing. He stayed for 1 hour and then left his guys to continue the negotiations. That, I think, is raising fears across the UK, which will hit economic sentiment and confidence about how seriously this Brexit negotiation has been taken. So there you go, political uncertainty multiplied by Brexit, not positive.
Right, so you're not really cheering us up this today, Bill?
Well, I think there are things to be positive about. I mean, when I say that political uncertainty times Brexit is uncertain, you must always then remember the laws of markets. Markets always overreact. And I think that's one of the issues that we've got to keep looking for in sterling. There will be opportunities that occur in the sterling markets to buy sterling or to buy UK assets cheap because of the amount of uncertainty engendered by the political uncertainty. And I think also in terms of global markets, we've had all this conversation about some big global reset later this year as QE policies are unwound. That will remove some of the distortion from stock markets. But the more I look at it, the more I'm beginning to think that they actually might be sustainable. A few months ago, I remember telling you that I thought October the 12th, 9:30 in the morning, that will be the moment that we get the global reset. Well, I'm not so sure anymore. And I am thinking that any kind of big correction, I'm thinking anything here 10% plus, is going to be a massive put your buying boots on signal to jump into the stock markets.
Bill Blain, strategist at Mint Partners, thank you very much for coming in today.